Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the first scenario where we're looking for a continuation of the range in a WXY scenario. Now this is a sideways double combo WXY where wave W is a zigzag and therefore wave Y is not allowed to be a zigzag. It can only be a triangle or a flat structure. And in this scenario we are looking for a flat in an A, B and then eventually a wave C. The most common target for a wave B is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of this wave A, giving you a target area between 74.6k and 73.5k. After this wave B, we then want to see an impulsive structure to the downside, where the target area for your wave C is between the two 1.618s. 1.618 is taken with the trend-based fib extension from the high to the low of A to the potential high of B, and the second 1.618 is taken with a normal Fibonacci from the low to the high of this wave B. Now what is quite interesting is that the target area for this wave B is in confluence with the all-time high. So one could wick the all-time high, grab the liquidity, make people very greedy, very bullish, right, expecting continuation, but instead we move towards the downside impulsively. What's also interesting about the flat scenario is that most commonly a wave C is a very quick, sharp move to the downside, and when we take the all-time high followed by a very quick move to the downside, it of course installs a little bit of fear, people selling, but then we enter the support area to return back towards the upside. What's interesting about the support over here is that it is in confluence with two things. First of all, we have the blue support area over here, additional support between 61.8k and 63k. Secondly, we also have a weekly gap over here, and this is the high of the gap at 59.2k. And you would expect, if price hits this gap for the first time, to see some support and price then moving away from the support area back towards the upside. You also see the vertical lines on the chart. This is a fib time. Fib time is taken from the high to the low of W and then put on top of the high of this wave X to compare wave W with wave Y in time. Now most commonly the relationship between a wave W and a wave Y is between the 0.618 and the 1.618. However, it is very normal for a wave Y to be longer, but what I generally don't like to see is a wave structure, this wave Y in this case, being 5 times longer than wave W, because Elliott waves is also about the right look, right context, the balance between the waves, and if wave Y by itself in a flat over here is going to be 5 times longer than wave W, the context between the waves is not that great, and I prefer to look for other structures. If we look at the second scenario, then we have a triangle inside wave X. Here we have again a zigzag in W, but instead of X being finished here, we are looking for a triangle structure in wave X, followed by a flat in wave Y. Now what I like about these two scenarios, this one over here as well as this one here, is that it either invalidates the big triangle that many people are looking at, which is this one over here, or it fakes out the triangle. So what you may have seen online is a lot of this like structure, the triangle A, B, C, D, E, and then continuation to the upside. However, what I don't really like is that if many people are looking at the same structure, I start looking for other structures and fake outs, because the probabilities for fake outs will increase if many people look at the same structure. So here we actually create a fake out of the triangle, because we have our A, B, C, D and then our wave E. However, wave D in this wave X is wave E in the triangle that many people are looking for. So after this move, they are looking for a breakout to the upside. However, in this WXY scenario, we're not breaking out, or I mean we are breaking out, but we don't see continuation. We move above the triangle trend line and then move back down again in a flat structure for this wave Y. 3 wave A, 3 wave B, 5 wave C to the downside to finish wave Y, and then we look back towards the upside. The invalidation for this scenario is price moving above the high here of this wave A or below the low of this wave B. The most bullish scenario would be continuation to the upside, where price breaks the highs and doesn't look back. However, that also means that this over here has to be the end of this range and this corrective structure. That is only possible in two ways, and you have to start the correction here. So either you have a running triangle in an A, B, C, D, and then a wave E. But what I don't like about this scenario, lowering the probabilities, is that this structure over here, besides the fact it looks like a flat, which isn't allowed in a triangle, this is also an incredibly short wave A compared to a much longer B, C, D, and wave E, which doesn't really add up. It is a running triangle, it is a valid pattern, it's just that wave A is very, very, very ugly. The second option would be a WXY, where wave W here is a flat structure. So you have a wave A, B, and a wave C flat. However, this move to the downside has a much higher probability of being a 3-wave structure and not a 5-wave structure if you would count this in detail, like we have done in many live streams and previous videos. So the fact that the probabilities are higher, this is a 3-wave structure, reduces the probabilities that this is a flat. Besides, if this is a flat, then it has to be a running flat, because wave C and then a wave A, B, C did not take the low of wave A, which is very rare, as a running flat is the most rare flat pattern of the three. You have the expanding flat, where you expect wave B to take the high and C to take the low, a regular flat, which is more like a ranging structure, where you also expect C to take the low, and then you have the running flat, where C doesn't take the low. Now, that being said, it reduces the probabilities that this is the end of this range over here. However, if we at least count this as the end and we look for scenarios towards the upside, it's actually quite difficult to have a proper solid impulsive structure of the low. Price here moved towards the upside in a very 3-wavy structure, and if we look for an impulse, preferably we want to see a nice 5-wave move, or we're going to look for diagonals in then a 3-wave, wave 1, then a 2, 3, 4, and eventually a wave 5. Diagonal structure, look for a retracement and then continuation. Now, in this scenario, clearly we don't have a nice impulsive structure to the upside at the moment, because if this is your wave 4 in a 1, 2, 3, 4, 5, your wave 4 went too deep, invalidating a wave 4. So that means we are stuck with a 3-wave structure, but at the moment there's no signs of a diagonal, which therefore means we have to think about potential 1-2s, 1, 2, 1, 2, 1, 2, and then continuation to the upside. The second wave 1, however, is much longer than the first wave 1, reducing probabilities that this is the correct count, as this is the higher degree wave 1, this is a lower degree wave 1 in Elliott Wave terms. I can explain this in more detail in the live stream this afternoon if you want to check that out, right? But then you have a wave 1, 2, 1, 2, and then again you need another wave 1 here, another wave 2 here, another one, another, it becomes very, very messy. So at the moment, probabilities are higher for corrective structures compared to the impulsive structures. Now, locally we have the resistance over here, right, where yesterday in the live stream we were talking about potentially flipping this resistance into support to look for upside and the triple top. However, price moved towards the upside, tried to find a support over here, but as it moved to the downside and tried to find support, it actually created bearish CVD divergences, as you can see here on yellow, lower highs on price, higher high on the CVD, a bearish CVD divergence showing weakness, not strength, increasing the probabilities for this support to break and move towards the downside, which we now have done, and now we are again retesting this area. We do have a bit of bullish CVD divergences here, higher lows on price, lower lows on the CVD. Target would be this high, and it's very interesting to see what price does at this resistance area between 69.7 and 69.9k. And the reason it is interesting is because of the two scenarios, because this area over here, this single area of resistance, is actually very important for the probabilities of both of these scenarios that I have explained. Because in the flat scenario, we want to break this and move towards the upside, and there is not too much resistance between the box that we have over here and the triple top. If I open my folders here, then you can see that above this white box over here, there's not much left till we reach the point of control of this previous range and the daily. However, we then get very, very close to the triple top. So of course it increases probabilities to take the liquidity above the triple top, but that would then also invalidate this scenario over here where wave X is a triangle, and it also invalidates the triangle scenario that many people are looking for, A, B, C, D, and then E, and then continuation to the upside. So actually the current area of resistance here is very important for the probabilities of the different scenarios. We do have some high impact news this week. So on Wednesday, April 10th, we have high impact news at 1:30 p.m. Central European Time, at 7 p.m. on Thursday, at 1:30 p.m. and on Friday at 3 p.m. So make sure you trade safe around these hours as volatility might increase. And if we then finally look at the probabilities of the different scenarios, then the probabilities at the moment are highest for price to continue in this range over here instead of continuation to the upside, which is the reason why continuation is on number 3. On number 1, we have the WXY with a flat structure in wave Y. In other words, taking the triple top and then look for a move towards the downside at the resistance areas. It is, however, very important to wait and see what price does over here, because we want price to move above the local resistance and preferably see a solid proof of support retest potentially, or in general proof of support. That is what we're waiting for. Here, of course, we're looking for proof of resistance. On number 2, we then have the WXY scenario, this one here, where we have a triangle in wave X and then a flat structure in Y, creating a fake out, also a fake out of the bigger triangle, and then we move towards the downside. So in general, I'm looking for these type of fake outs and non-triangle scenarios because everyone is looking at the triangle. That being said, I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.